New data from Bank of America is showing that inflation is affecting renters more than homeowners. Well, that's a shocker. But before we jump into that, make sure you hit subscribe below to stay on top of all the latest Huntsville, Alabama real estate news and inflation. One of the key findings of this study from Bank of America is that renters are spending less outside of housing than homeowners are. And that's really no shocker because rent is continuing to go up in this country. And so as we have inflation, we have rent increases, that's going to obviously affect renters more than it's going to affect homeowners that typically aren't on a fixed rate mortgage. That's one of the great things about this country is we have 15-year and 30-year fixed rate mortgages. And so homeowners are able to ride out high times of inflation, and it doesn't impact them as much because a majority of most people's expenses do go towards home ownership or housing. And so homeowners are not feeling this nearly as much as renters. And so renters are really feeling the bite, and they're just not having as much disposable income to go out to eat, to spend money on automobiles, or to go on vacations this summer. One of the key findings of this study is that renters are spending less money outside of housing than homeowners are, which is really no surprise because when you rent an apartment, you know, that first year may be $1,500, but year two is likely going to go up. It may go up to $1,600, or it may go up to $1,750 the next year and then $1,900. And there's really no end in sight to those rent increases because there's no end in sight to inflation. There's going to continue to be money printing. Even at the projected target that the Fed has, we have 2% inflation. So with that, you'll continue to have rent increases. Whereas a 30-year fixed rate mortgage, you know, homeowners, you know, if their payment is $1,500, it stays at $1,500 for the remainder of that term, are pretty close to that. You may have some slight increases with insurance or taxes going up over the years, but for the most part, your payment is staying low and staying fixed, and you're able to ride out those periods of high inflation. The other thing that's especially stinging renters right now is we were in a period of relatively low rent inflation. It was only 2% back in 2021, but it has surged to 8.8% this March according to the Consumer Price Index. And so that's why renters are being so burdened by this inflation right now. They're getting hit from multiple ways, and they're having to find ways to cut expenses, cut spending, just to be able to keep up with those rent increases. On top of all that, 49% of renters are what you call cost burden, meaning 1 out of 2 of the renters in this nation are spending more than 30% of their income towards housing. 30% is kind of considered that magic number. If you can stay at or below that, that's considered a healthy balance towards, you know, income to housing. And the challenge is nearly 1 out of 2 people in this country are house burdened, and it actually gets worse. So that translates to 21.6 million households, and over half of those households, 11.6, are what you call severely cost burdened, meaning they are spending 50% or more of their income towards housing, which is basically keeping them from being able to save up money towards owning a home and kind of getting out of this maze, this rat race of chasing higher and higher rent. So as we discussed, homeowners are experiencing inflation a whole lot different than renters are. And it's all because of this key concept of a 30-year fixed rate mortgage. It's something that our country benefits from versus the rest of the world that simply does not have these 30-year fixed rate mortgages. And it's really the power to unlocking wealth, and really in 4 key ways. You know, number one, we already kind of talked about, is it keeps your payment low and fixed for that 30-year period, whereas rent is going to continue to go up year after year. The second big benefit is a portion of this payment, not only is it staying fixed, but a portion of that payment is actually going towards like a savings account and building over time as you pay down that principal. Number 3 is you have leverage appreciation. So it's not just appreciation, but it's leverage appreciation. So for example, if you were to put 20% down payment, you're not just going to get whatever appreciation is in the market. Let's say there's 5% appreciation. You would actually get a multiplier of that. You would get 5 times that. So you'd get 25%. A lot of first-time home buyers aren't even putting 20% down. They're putting down, you know, 5% or even less. And so if you were to put 5% down and the market went up 5% on your home, you've actually effectively doubled your money, as you have 100% return on your investment. So that's one of the key ways that a lot of people are building wealth through home ownership. ownership. And then the last thing is Uncle Sam wants you in a home because they're printing all this debt. They need a way to create that debt, and that's through mortgages. And then also they just want you in a home, and so they provide you with all these tax benefits. You are able to write off your interest and then the property taxes, and so they're really kind of partnering with you on this deal to help make it even more affordable as well. So if you're wanting to learn more about how a 30-year fixed rate mortgage can help you get off of this inflation roller coaster and help you start building wealth for yourself, give us a call at 256-333-MOVE or shoot us an email at moving@mattcurtisrealestate.com.